On est déjà rendu à quelques heures de CryptoInMontreal 20. Je m'en vais dîner. Le sujet de ce soir, ça va être est-ce que nos cryptos, est-ce que nos gains et pertes en crypto sont comptabilisés par le fisc? Good job! Un de mes restaurants favoris pour venir dîner ferme à 8 heures. Donc, je vais pouvoir manger correctement juste avant l'événement. C'est finalement l'heure du souper, le fameux sandwich des champions, animateur de soirée meetup. La soirée commence dans environ 2 heures. Temps de me refroidir un peu, je crève de chaleur. Et on part ça. Meetup va commencer dans quelques minutes. On va enfin filmer. Et je suis avec Jérémy ici, de chez JetKit. Minor accompli. Alright. À plus. On peut officiellement commencer. Je crois que personne va encore venir et faire retarder l'événement. Je ne prends jamais les présences en soi. Je serais juste curieux, RSVP ou non, c'est pas ça qui m'importe. Juste curieux, en général, où est-ce que vous suivez l'événement? Comment vous savez que l'événement existe? Est-ce que c'est sur Meetup, Facebook, Eventbrite ou autre? Donc, Meetup, levez la main s'il vous plaît. J'imagine que c'est la majorité. Super. Eventbrite? Personne Eventbrite? J'avais officiellement 5 RSVP. Facebook? Personne officiellement Facebook. Puis autre?
LinkedIn.
Ah, LinkedIn. Cool. OK. Puis autre? Telegram. Yeah. I'm on Telegram, but not as CryptoMontreal.
It was a blockchain. Yeah, blockchain.
Okay, it wasn't for me.
No,
Some fan.
I have no idea who. He's Jesus.
That's it. All right. Hey, merci beaucoup d'être là ce soir. D'environ une vingtaine. Belle crowd. On va filmer l'événement pour la première fois. Et éventuellement, ça va se retrouver sur la chaîne de CryptoMontreal qui n'est pas encore démarrée. Donc, on est rendu à l'événement, l'air de rien, 20. Et je pense que ça vaut la peine de fêter ça avec une bonne toune. Ça mérite un peu plus de volume. That's it. Je me suis gâté un peu de fantaisie sonore. Pourquoi ce buzz-là? Dans une autre vie, j'ai été ingénieur sonore. J'ai mixé de la pub, des pubs radio, télé. Je joue de la guitare, j'ai eu un band, tout ça. Et c'est quelque chose qui m'a toujours tenté de faire, avoir un sampler durant les événements. Fait que j'ai finalement mis du temps. Il faut encore que je tune le volume, tout ça, mais on va l'avoir. Ce soir, on vient pour en apprendre plus grâce à Laura. Donc, je te laisse le plancher. Merci beaucoup de te joindre à nous. Et je vais mettre une chanson pour t'introduire. Alors, accueillez Laura! Yes! There we go! Tout de suite, je peux la décrocher direct.
All right. Can you guys hear me? I could probably scream to the end of the room as well. Thank you so much for having me. I'm going to be doing the conference. I'm going to talk about some points, and I want people to just throw the questions out because it's always more interesting when we get a discussion rather than just me droning on about tax law and all that boring stuff. Yeah, I know, right? Ça va? But that's it. So what I want to say is if you have questions and you want to say them in French, shoot them at me. I can answer them in French or in English or both. Or Romanian if anybody wants. No. And we'll just go like that. Just a little bit about me. I'm a tax lawyer by trade. I do mostly corporate tax planning, but I've developed a particular interest in blockchain and blockchain taxation, and part of that being crypto tax. And it's been about 1.5 years that I'm in that space. My firm, he's taking off his shirt. My firm has a big blockchain group, so we have a sort of a variety of expertise, whether it's securities law or corporate smart contracts and all that stuff, and I do the tax side of things. So it's really exciting and really interesting new field, and something that I'm really excited to talk to you about. Tonight I called it went away, taxation of cryptocurrencies, because it's sort of the field that we've had the most thought on in the tax community, but tax obviously can have an impact on blockchain in general, depending on what kind of applications we can come up with for using the blockchain. So that's going to be interesting. But tonight I'm going to focus more on crypto taxation. The first piece of bad news I have for you is that it is taxable. I know that when I first started and I'd go to all the... If I don't sound too bad, I said he can put it on. So when I first started, a year and a half ago, and I would go to the different meetups and the different conferences, and it was very grassroots. At the time, people were shocked to see a tax lawyer in the room, and they were really shocked to hear that it's taxable. It was sort of this thought that crypto and blockchain is not covered by any legislation, and now we've learned that that's not true. And that it's not covered at all by any tax law. So it's Wild West. Whatever money you make, it's yours, and off you go. And I think we've already seen that with what's happened with the security regulators imposing and going after ICO issuers and everybody who is offside the securities laws. People are realizing that there are laws and rules that apply to crypto. Yeah, go ahead.
So in the United States, the SEC has been explicit that Ethereum and Bitcoin are not securities. How has Canada treated them?
So I think you're thinking of it from a securities law point of view. So it's really important that yeah. So let me answer your question and then make a point from a tax point of view. In Canada, we haven't had that clarity yet. What we've seen from what my security law guys are telling me is that they're seeing things like ICO issuers getting calls for having issued securities without a prospectus and without the qualified investor exemption applying. A qualified investor is somebody who has met certain thresholds. They have $5 million of assets, or basically saying this guy or girl is so rich that he doesn't need the law to protect him or her from the scoundrels that sell you thin air, okay? So we've seen that. We haven't seen anything clear as the SEC has issued. Maybe they will follow it eventually, because there seems to be a common trend across the world as this thought process develops, but I can't tell you exactly. What's important, though, as we go through this discussion tonight is that just because securities law says it's something doesn't mean the tax law says it's the same thing, because when I talk to you about security, it's a definition, or I'm not going to go in definitions, but when I talk to you about security from a tax point of view, it's a definition with 1,000 little articles and not what security guys are talking about. Because from a securities law point of view, the definition is much more broad, because we want to protect many more people from being ripped off, for not having a prospectus that sets out what exactly am I investing in and what's the return and who are the people, management, and so on. Whereas tax law says a security is a share, it's something very specific because it has a specific tax treatment, sales tax treatment, for example. So that's why we're not talking the same language. It sounds like the same words, but it's not necessarily.
How have banks been, in your experience, in terms of accepting large quantities of CAD that are from Bitcoin-based or crypto-based income?
You mean Canadian dollars?
Yeah.
Can you repeat the question?
Yeah. So you're asking how are banks accepting when you?
How are they accepting? But I mean, how are they been? I know that some banks are hesitant when they receive, say, $1 million or $5 million from crypto. What's your experience been with Canadian banks, and are they becoming more accepting of it?
Well, the question is, are Canadian banks been more accepting of somebody who has now just exchanged their crypto out into Canadian or another fiat currency? I haven't seen a trend towards more acceptance yet. Historically, I'd say in the commodities. So it's as if I'm trading in grain or coffee or anything else. And what that means is that every time you transact, you dispose, or you buy crypto. So you're buying from cash, Canadian dollars, into Bitcoin, and from Bitcoin into Ethereum or some other ICO, because you're trying to get in, so you need to get Bitcoin first in order to get into an investment, you are effectively selling a commodity, an asset, and that triggers taxation. So if you've been trading in Bitcoin and other crypto over the last few years, every single time you traded it, and you could have been playing around, back and forth, every single time you're theoretically supposed to report what's your gain or loss on that transaction. And in tax, I don't know if you guys are familiar, there's two kinds of treatments that you can have of a gain, I'm going to call it, on a transaction or a loss. Either it's an investment, a long-term investment. I'm going to buy some stock and hold it for later and get some dividends on it. So it's a long-term investment. I don't trade that very much. In which case we treat it as a capital gain, which is good because only half of a capital gain is taxed. The other half is tax-free. Or if you're a trader, so you spend a little bit of your day or most of your day looking into investments, trading different cryptos, then we treat it as we call income. So like a trader, he earns income. That's his, and he has inventory of crypto to trade in. And so that means 100% of your gain on a transaction is taxed. Now, that usually is bad if you made a lot of gains. But if you do your math and you realize, oh my gosh, I actually have a lot of losses, sometimes it's better to be a trader and having income because we call it a business loss, so a loss from your business of trading in crypto is deductible against any other source of income. So you got employment on the side, so you got revenue from your employment, you can deduct that business loss against your employment revenue. Whereas if you were actually really holding it as a long-term investment, a capital investment, and you have a capital treatment or the capital gain if you made a profit. Well, if you make a loss, you have what's called a capital loss. And capital losses are not as good because you need to have capital gains somewhere else to offset them. So you can carry them forward, but you could be paying income on your revenue from other sources, let's say employment or your other businesses that you have, and not be able to deduct the capital loss. So anybody who's looking at their investments over the last few years and says, I want to report this now because I'm told I have to report, and you do have to report, has to sort of ask themselves, what kind of investment have I been making? What kind of, am I running a business of this? Am I a trader in this? Or am I really just holding it? And the problem is that most people trade quite more often than historically would be the case when we looked at shares. So a lot of times people who may not have traded that much from your perspective may have traded quite a lot from CRA's perspective, because every time you need to get into an ICO, you need to trade a couple of times, maybe other currencies, just to be able to buy in. So there's a question back here.
Three questions. Is the frequency of trading the only thing that distinguishes capital from income?
No, there's a number of factors. One of of course, and I have them all listed, but how much funds, how much time you devote to it, how much expertise you have, whether you invest a lot of funds versus a little, what's the frequency, obviously, what was your intention at the beginning, did your intention change throughout the holding? So there's a number of factors. There hasn't been, when they've talked about this, the tax authorities have said, look at the factors we used to look at for shares, and these are some of those factors, and apply those to your crypto trading. But what we've seen is that even people who are not really doing it as often as people would trade in shares, people who do it more often than we trade in shares, maybe are not doing it full-time or as a full-time business. I mean, I always say, if you quit your job and this is all you do, but after that, between that and I invested once and held it for 3 years, there's sort of a gray area. The worst you can do is not declare it at all, because then there's no prescription running, so that they can always come back. Even 10 years from now, they come back. You know how you made $1 million and you kept it in that account in Switzerland, or actually they have exchange of information, so they'll find you. You never declared anything. At least if you took a position and said, I think it's capital gain for these reasons, maybe I'm wrong, but at least I declared it. So there's no gross negligence penalties. Maybe there's going to be the tax to pay and some interest, but at least you're better off than nothing, or at least you have an argument to make. Yes. Oh, yeah, and then we'll get back to you for your second question.
Would it be a good scenario then to keep track of what you invested initially, and then when you get it out in fiat, to compare, and then use that number to...
So there's a number of issues. Yeah. There's a number of issues with that. So theoretically, and there might be more clarity coming out, theoretically what the tax authorities have been telling us is that it's not just when I go in from Canadian dollars into crypto world, and then when I get out and that's it. And I just compare year one, my investment versus what I got in cash, Canadian dollars at the end. That'd be ideal and easier to do. What they're saying is when you're in crypto, when you're exchanging from one to the other, you have to, every one of them say, well, I bought at $10 this crypto, and then I sold it at $12 for this other one, but then it went to 8, so then I sold it at 8, so I have a gain on the first one, but a loss on the second one, so I offset those. And this all makes sense sort of if you actually had the information, but there is, and they admit, a lack of information. Now a little bit less, but at the beginning, in the last 2-3 years, there's a lack of information on the exchanges, or depending on how you're trading, of the actual values and which Bitcoin did I sell? Is the first one I bought, or is it an average? So there was quite a lot of issues with that. I know there are some, I'm not telling them, I don't even know what they're called, maybe you actually know. There are some accounting software solutions where they help you get at least some of the data information out. Depends, from what I've understood from those who trade quite a lot, if you trade a lot, it may be worthwhile to try it. If you don't, it may not be worth the money you spend on getting that, and it doesn't necessarily trace everything. So it's sort of a gray area. The tax authorities seem to, at least the CRA, recognizes this as an issue, but they haven't come out clearly to say, just do it, just do the reporting when you go in, when you get out. So what that means is that theoretically, if you're able to, you could have bought in 2017, exchanged it a couple times. At the end of 2017, you haven't sold back into cash, but you could have had a gain that year. And then you have to, technically should be reporting and paying tax on a gain, but you have to have other cash to pay it with, because CRA does not accept crypto. I had this question, somebody's like, can I just pay them in crypto? I'm like, no, they don't take that money. So you'd have to find some other cash to pay in 2017 the tax for that theoretical gain that you don't have yet in Canadian dollars. It's still in the cryptocurrency. And then in 2018, you finally decide, you know what, this is going downhill. It's not going to make more money. I'm going to sell it. And you have a loss. So now you have a loss that you have to apply against the gain last year. And this year you're going to get a refund. You're going to redo your taxes for last year. Or you might just do it all at once because you never filed. I don't know. Yes?
What if you don't have a proof of purchase?
Well, how did you?
There's a transaction, for example, you did it in 2014, 15, and you're selling in 2018, but they don't know how much you bought it for, if it's from mining or whether it's from hand-to-hand exchange or gift.
Yeah. So what if you don't have proof of purchase? You have to, well, how did you get it? You have to show at least your best attempt at it. So there's issues with mining, right? Because mining has been treated as if you have generated inventory. So a miner of gold or other metals, the cost of the item of gold to them, of inventory to them, is what it costs them to produce it. And then when they sell it, they will have, there's a calculation to be done, they'll have a gain or income, and they'll reduce from that income their cost of goods sold. So they treat mining the same way, to say that you generate inventory of Bitcoin, even though you know on the day when you got that Bitcoin from your mining activities actually what it's worth. They don't treat it as a service that you provided to the blockchain, because they say the blockchain doesn't exist as a person who can receive it. So it must be inventory. So you have to effectively treat it as if you have inventory of a business to determine what your cost of that inventory is. And then when you sell it, so that would be, let's say you had electricity, the servers you bought.
It's like a business activity.
A business activity, yeah.
But what if it's a one-time purchase?
If you bought it once, well, so they'll ask you for the best proof you have of how much you paid for it, because you know somehow that you made money on it and you lost money on it, right? I mean, either you got it.
Do you think that date, the transaction times the quantity times the price of the day, or based on some exchange?
So your question is, can you just use an exchange rate of that day? I think the best thing would be to have some proof. If you cannot, and you do your best efforts to come to a number that makes sense, especially if you're paying some tax at the end of it, you may have a better, if you're using that and you say, well, I have a loss, I'm happy to say that, I use this because I picked the best one. They might say, you know what, that's great. We picked this other one. Why is yours any better than ours? Because you're saying, you know what the price was. So we'll use this one. It's worse off for you. And then you have to challenge that. So I'm not saying this is guaranteed what the auditor will do, because they also don't have more guidance. They recognize there's a lack of information. But what I'm told from their point of view is that they are feeling that they're getting more and more data on what the amounts were, what the rates were. And they'll say, well, there's about 10 people on that day, and they told us all that they bought it at this cost. And you're telling me you bought it at 3 times more, so you have no gain? I don't think so. I already know that. So that's sort of where they're at. So as they get more sophisticated, your ability to argue something, it gets less so, unless you really do a good faith effort, and then you should be hopefully in line with what everybody else is declaring too. Yes.
Just to clarify, if say I mine and I mine a block at a certain date.
Yep.
Get my Bitcoin, the price of Bitcoin goes up, and then I liquidate. Do I have to pay cap gains on the spread there?
Normally, you probably are making income, 100% income, and not capital gains, because it's inventory of a business. So you're not a passive investor. You are dealing in crypto. So that means 100% of your gain is taxed, and it's.
Do you vote? Do you come up? Do you keep it separate? Or
Yeah, well, you can't.
Together?
If you're doing mining and you're doing trading,
Yeah.
you're probably a trader. Yeah, you're probably a trader anyway, even if you're doing it.
So you combine the mining, or the crypto that you mine with the other crypto that you trade, and that's your inventory? All
Yes.
Together?
Yeah. Yeah. Yeah, I don't know if I missed anybody here, but there's one. Yeah.
At what point are you supposed to declare it? Is it when you buy it and you hold it, or just when you sell it? Like you buy something and you hold it for 3 years. Do you have to declare it during these 3 years, or you just declare it when you sell it?
So the question is, what point you have to declare, when you buy it or when you sell it? So the short answer is when you sell it. The longer answer is that for now, sale is defined as transferring it into some other currency, whether it's, so if I'm doing Bitcoin to Ether, I've sold it. If I'm doing Bitcoin to Canadian dollar, I've sold it. If I'm doing Bitcoin for that server that I want for my mining rig, I've sold my Bitcoin. Okay, because when you use it to buy things, it's not like a currency. We don't get taxed we do get taxed when we sell foreign currencies into Canadian. You can have foreign exchange gains and losses. But when you take your Canadian dollars and you hide them under your bed for 5 years, and they usually go down in value, but let's say they went up in value, okay, the fact that 5 years ago, $5 was worth less than it's worth today, I'm still in Canadian dollars, nobody traces that, it's because it's all currency. It's all Canadian currency that you're using to buy. But because cryptocurrency is treated as a commodity, as a good, the same as a chair, if I bought it for $5, it was worth $5 2 years ago. When I sell it today in exchange for a rig for what's equivalent of Canadian $10, I have a gain on that crypto. Okay, so that's why I say it's not, we say sale, but what tax says is transfer. Anything that I get rid of it in exchange for something else, and even if donate it, maybe you'd still have a disposition even when you donate it to somebody else. I'm gonna this person behind you, and then you as well. Go ahead.
Just a quick question. Let's say I bought a car.
Yeah.
And I sell it.
Yeah.
Should I declare it? Like I bought it for 5K, I sell it for 3K. Should I declare a loss?
Well, so
same month.
I think so. We have to be careful because there's certain things that are either exempt in their specific thresholds. There's a personal property, like the very limited threshold, and there's losses that don't come from a business. So when you have a personal car that you sell and you have a loss, you don't have a business loss. You just have a personal loss. So you don't get that loss. You can't claim that loss. But there's a concept of what they call an adventure in the nature of trade. One time you try to do something, somebody was saying, what if I just held it once for 3 years? that could be like you said, I'm going to try this. And it was really a business intention. It wasn't that you wanted a car for personal pleasure and driving and then you sold it and that's what happened. It's really a business. So in that case, you would be, so you could have a one-time business, one-time adventure in the nature of trade and be taxed on it anyway. And that is probably where they're going to go. I think there was some discussion at the beginning that some mining that was very minimal. You once tried on your computer 3 years ago and you got 1 Bitcoin and lo and behold, it went up in value. Like never would you expect it. Maybe you could get by saying, I didn't expect this. I didn't even know I had it. I just got that. I had a story of somebody who had literally done that and saved it on a laptop that they gave to their friend and said, look, I'll buy it back from you so I can, get the crypto because it's worth more than the money I'm giving you for it. And the guy didn't know why he wanted the computer. So, and I think he made like 10,000, So maybe he could argue that he wasn't a business, but everybody else is probably going to get there. Yeah. So you had a question too?
There are many transactions that you buy at a price, you sell at the same price because you want to get another token. So I think those cases there's no gain.
Yes. If the value hasn't changed, obviously there's no gain. So it's a question of knowing what the value is, and I think that's where the biggest challenge is. So once you accept, okay, I need to declare what the gain or and the versus minus the losses are. It's the question of how do I transact or look back through, trace back my transactions to see what the cost was and then what I sold it for. I think that's sort of the challenge people have, unless some people have had only a few trades, so they can pretty much put it together. It's people who have a lot of transactions that have to make a bigger effort or try to use some of the software that's out there trying to give you better data on that. So that's go ahead.
You say every time you do a trade,
yeah,
you need to, it's like a taxable event, right?
It's a
taxable event.
Yes, every trade is a taxable event, yes.
So if I put some coin on an exchange, I trade a few things, and I withdraw, can I just compare what I put in the exchange and what I withdraw? Or I need to go through all the exchange I need?
So as I was saying earlier, so it's not just the time you bought into an exchange that you have to consider the cost and then look through your trades and at the end say, what did I sell into cash for? It's every single transaction on the exchange that should be traced and reported on right now. Unless, if they come up with new regulations, that'd be very, very useful, but so far they have not. And it's true of CRA and it's true of Revenu Québec that they say every transaction. And so Revenu Québec came up with some, what they call interpretation. Somebody sends in a question and then they answer it. And they said, what if I am a miner and not a young person, but I mine Bitcoin and I generate Bitcoin and then I trade it for mining rigs? What happens? And they said, well, when you sell your Bitcoin for that mining rig, you are disposing of it, so you have a gain or a loss on it. And then they said something worse, which is to say every time you dispose of crypto and you're a business, you are making a sales taxable transaction. Sales tax applies. So technically you should go register for GST and QST and collect sales tax on this transfer of property. And that's sort of the other level that to date I haven't seen a lot of people complying with because there's a lot of problems to how to comply. Like not only are you supposed to report your income, so there's sort of three levels of tax that you deal with. One is on your income. So if you're an employee, you pay income tax on your income. But when you go to the store and you buy things, you pay sales tax, right? But businesses are required to collect sales tax unless what they're selling is exempt. And if you sell, quote unquote, real Canadian dollars, it's exempt. If you sell shares, it's exempt. It's called a financial instrument. So there's certain things like that that are exempt. Cryptocurrencies are not financial instruments under the definition right now. So technically they are not exempt. So every time you sell them, and you're a business, right? So if you're not a business, then, but it's very few people who have crypto who are not in a business at all or a commercial activity. Above a certain threshold, above $30,000 of trading, right? But that could happen because in a year, if you trade a bunch of times, every trade counts, so you could theoretically get to 30,000. You should be collecting sales tax on it. This is what Quebec has said. the CRA has sort of danced around it, and they like to say they never specifically said it. They kind of let it be sous-entendu, understood, but never clearly said that's what happens. But that's sort of an issue that comes up. And it's important, especially for beyond the point that theoretically come around and say, you're a minor, you're in the business, you should have registered, you should collect the sales tax when you sold your crypto for cash or for rigs or for whatever it is, or even paid your employees in it. Technically, you're disposing of it, right? Or to saying to the exchanges, hey, you are facilitating this. You should not only be collecting taxes. There's now rules that people who facilitate these trades need to collect the sales tax on behalf of it. That's why that's called the Netflix tax. Netflix is supposed to collect tax. The Airbnb is supposed to collect sales tax. So not only should the exchanges collect, but when they charge you fees, they should collect sales tax on that. And so they could do that. But more sort of urgently, some of the miners out there are claiming tax credits on some of their inputs. So when they pay Hydro-Quebec, their sales tax on it. And they're saying, well, I'm in business. Can you refund me the sales tax? Because if you're in a commercial activity, you have to collect tax, but you can claim back the tax you've paid. So these guys here, you paid $10 plus tax to get in for this event, and they paid tax on the coffee and the whatever else, the electricity here, the rent. They get to claim back the tax they paid, and they collect the tax from you and remit that. So there's that sort of dual thing. So nobody's collecting tax, but some people have started claiming the tax credits back on some of their inputs. So what's going to happen eventually, people think, because we've seen that already in Europe and Australia, and is this idea that at least certain currencies like Bitcoin may be treated as currency from sales tax point of view. So everybody's like on their own little world. Sales tax, it's a currency maybe, but for securities law, it's a security, and God knows what's happening. Or maybe it's not, because the SEC said maybe it's not a security. So everybody's doing their own thing. But Europe has said they have a European court decision that says, the Bitcoin looks like a currency to us. So sales tax shouldn't apply when you trade in it. So and Australia said that makes sense to us. Bitcoin trading shouldn't have sales tax. So eventually the CRA might come around to saying, that makes sense to us too. If you're Bitcoin, you might be okay. But if you're this other thing, maybe you're not okay. And that means that everybody who's been claiming that input tax credits on their rent or their electricity, all of a sudden are denied. Because if you are making or dealing in financial instruments, these, the shares or cash or so on, you don't have to collect tax. But on the other side, the government's not going to be funding your tax that you're paying, sales tax that you're paying on your inputs. So some people might be getting denied those credits. So it's still up in the air. Nobody's clear on where they're going to be going on that. And I think what's going to happen there might be some leeway. As they figure things out and they say, this is what we think it is going forward, they might be more lenient to things in the past, provided people were consistent and were reporting and paying, income tax and so on what they're doing. There might be some ability to say, well, we tried. You told us it's taxable. Now you're saying it's not. How was I supposed to know? So there might be something to be done there. The point, I think, right now, the message is still comply as best you can, because at least then you have some sort of wiggle room, right? Rather than saying, well, you've done nothing. And obviously it depends on the volume. If you've, I have people who made $7,000 total. Okay, well, you could report it. It's not going to cost you a lot anyway. If you don't, it's going to be, a liability that comes after you. There's going to be some penalties, some interest, but you're not going to go bankrupt from this, hopefully. So it depends on your exposure as well, how much you've been trading and how much of an issue it could be for you. Go ahead.
You said earlier that you can carry forward capital losses. Can you carry forward the income loss?
Yes, you can. Business losses, yeah. You can carry forward both capital and business losses. There's different rules about the delays, but usually you should be okay.
Business loss in the context of the individual.
Yes. You can carry on a business as an individual. They call it a sole proprietor, but basically it's yourself carrying on a business.
So the question is, can an individual carry forward business losses? But the answer is yes, an individual can carry on a business. A minor could be a corporation or it could be as an individual. So you can, the rules apply the same way, whether you're a corporation or an individual. There's a question here.
So we talk a lot about hacking. So let's say you buy Bitcoin in 2012, 4 years later, your coin is still in exchange, you get hacked. Coins go to a different ledger and stuff.
Yeah.
And you get stuff. So can you do anything about like, in terms of like, the government, the CRA is going to come after you after a few years saying like you did a transaction or you did not. So you have to prove that you actually got your funds stolen. You have to do like a report to the police and go back to the CRA saying, hey, look, this is like, how does that, because things are actually happening, right?
Yeah.
So how do you manage that in a tax perspective?
The question is, what happens if you get hacked? So you theoretically bought at a price, and if you had sold it, you may have made a gain. But what happens is that you lost your currency because it got hacked. So you're basically, it's a theft, right?
Yeah.
So you have to prove it in some way. I mean, if you can't prove it's not still if you can't show that you don't have it anymore, it's hard to say you don't have it. Like, how do you know you don't have it? You know, a lot of times it's about logic. You know, how do you know you don't have it anymore? Well, I know because of this. Well, that's well, how do you know? If you cannot explain to somebody else how you know you don't have the funds anymore, how can they believe you? You know what I mean? But do you have to go to police and file a report? I'm not sure. It's more a question of if you can prove there was a hack and you can prove that it's no longer in your account, there's a transaction out, but it wasn't to yours, it was to somebody else. You should be able to see on the blockchain though which ones were.
Use that for tax fraud. Simple example: you come with cash, you buy a ledger, you transfer your fund to the new ledger. No one's never used that. You just show on the blockchain that because that ledger had never been used.
So you create a new blockchain?
No, new blockchain. It's just transferred to something that there's no one knows who is the owner of the ledger because there's been never no transaction.
But in your example, this is a simple transfer. It's not an act.
Yes.
An act is like, for me, it's in the marketplace, when exchange, I should say.
Yeah.
Or
they have an act, you know.
Yeah. So if there's a hack and it's only of you have an uphill climb to explain.
Yeah, it's hard to explain.
Yeah, you know, and I think, I don't have all the answers, and there's definitely been until now some feeling that there are some players who are trying to swindle the system, and they're going to be sort of the low-lying fruit that the tax authorities are looking at. And there's a consortium of 5 tax and anti-money laundering government bodies, U.S., Canada, Great Britain, Australia, and Germany, who have gotten together and will try to put together programs to catch tax avoidance and just money laundering and criminality generally, one of which is through cryptocurrency, but it's not the only one. And they're really looking, when you hear what their raison d'etre, their reason for existing is, they're saying, we need to make sure that there's no tax evasion. There's a difference between what we call tax avoidance, planning and doing something that's unfair, and we might catch you. And tax evasion, tax avoidance is bad. There's penalties, but you don't go to jail. Tax evasion, where you're like, I'm gonna do this structure where I create a different account that nobody can trace, and I take all my money, put it there, and pretend somebody robbed me. You can go to jail. If you look at the U.S., that's how they got all the mafia guys. They were doing tax evasion, and they couldn't get them on killing somebody or putting a cement feet and putting them in the river, but they could get them on not having paid their taxes. So that's what they're going to go after first. Somewhere in there's going to be some unlucky people who also get audited and who didn't do a good job because they didn't know any better and they didn't want to, whatever reason, and they could also be, caught in terms of having penalties. But penalties are money, If you're in tax evasion, which is what some people would have done, you could be going to jail as well as paying fines, which are a lot higher usually than just penalties. Not that much of a market for what you're giving them, but people are buying in. Today you give it to them at X amount, that could be the value. But then later on the whole thing crashes. So now again they have a income of a certain amount and probably capital loss because maybe they're not traders at all. They just do the work and they got this one amount of ICO from you. So they could have, income again to pay tax on, but they don't have with what to pay the tax. So it's quite an issue right now because of the way it's seen as it's as if I give you a chair. It's got a value today, this chair, so that's what you get taxed on. But if later on the value goes down, well, too bad, you already got the chair when it was worth more. So that's the value you got. So there's other issues as well with reporting. So if you're holding, let's say there was a question earlier, what if I just buy it? Nobody's done this yet that I've met. Maybe one person bought it, didn't do anything with it for 2 years, just literally sat on it.
Puddle.
Just literally the same Bitcoin he bought 2 years ago, he sat on it, and then one day woke up and said, "My God, this is worth money. I'm going to sell it." So that person probably has the capital gain treatment. But the problem is if you have a lot of it, and now it's not so much the case because the value's gone down. But last December, you don't have to have that much Bitcoin for it to be worth a lot. There's rules about foreign property where you have to report what amounts you hold in foreign property that's over 100,000 total. And the question has always been, how do I know that my Bitcoin is not foreign property? Because where does my Bitcoin sit? What if it's on a U.S. exchange? There's rules for shares, for real property. Obviously, if you have a building in the U.S. and it's worth $200,000, you have to report it every year. And it's just the reporting on your tax return. I hold a building in the U.S. worth $200,000. But if you don't report it, the penalties can be 5% of the value. So if at the time you didn't report it, it was worth 500,000, well, 5% of 500,000 is quite a bit of money. So what sort of in the question is, how do I know where Bitcoin sits? And the idea is, if you're already trading, if you're already reporting your trades, you might as well just put all down on the reporting for foreign property as well, so they can't come back and say you never reported. You say, well, I don't know if it is foreign property, but just in case it is, I'll tell you about it. But then you got to tell them about them next year when you sell it too. So sort of a catch-22. I'm going to get this guy and then you. Go ahead.
So there's no penalty for lying or making a mistake when you answer positively to that question where you say you have $100,000 cost in foreign property.
Is there a penalty for reporting something as a foreign property that's not a foreign property? Well, to be fair, the reporting form is 4 pages, and you have to go through and report. I have 100 Bitcoin, and it's worth this much. I have 20, I don't know what, and it's Bitcoin Lite, and then so many of this other one. And oh, by the way, I also have, because now you're over 100,000, right? So I also happen to have this apartment that's worth 20,000 in Florida. You have to report everything, right? So it's not just checking a box because the idea being they want to know that you, as a Canadian, you're taxed on your worldwide income. Every time you earn income from anywhere, you're supposed to report and pay tax on it in Canada. And if you pay tax abroad as well, withholding at source, you can to claim that as a tax credit in Canada against your Canadian tax. So the only way they can, well, there's 2 ways they can find out. 1, you have to self-declare by filling out this form. And 2, they now have exchange of information with most world jurisdictions, including the ones that used to be sort of tax havens in the past, where there's 2 things that happen. 1, everything that you declare from tax point of view gets transferred back to Canada. So the tax authority in France tells Canada, Laura has this much money declared or this much money in France. And the way that the tax authority in France knows is that the banks have to report that money. So people who have foreign bank accounts are getting these letters saying, hi, we know you're Canadian. Can you please provide this information, which we are required to give to our tax authority, who will then graciously provide it to your tax authority in Canada. So even $50 in a French bank account will be reported by the French bank to the French tax authority, who will report to the Canadian tax authority, who will then look at your tax return and say, funny thing, I don't know why Laura has $200,000 in this French bank account, and she hasn't reported any kind of source. She says she has $15,000 for all last year. That's interesting. And then they can, from there, and what they do is if you can't prove where you got the money and why, they'll just assume you never declared it and it was pure income, 100% taxable. So that's sort of like how they catch you. Either you self-declare, and then of course they'll come back and say, that form, you never filled it out either. So there's another 5% with the other things. There's a question here, and then we'll go back. Go ahead.
first thing,
Okay.
as the host,
Yes.
I need to get a mic for the questions in the room. So I'm
Yeah.
gonna buy that for the purpose of making CryptoInMontreal better.
Awesome.
Now,
Woohoo!
so I'm gonna basically speak on the mic as well. All of this, up to this point, I'm like, it's complicated and it's like, whoa, this is amazing. But I believe that there's a next wave which will erase all those little questions in my mind.
Okay.
In few years, cryptocurrencies, Ethereums, or even Bitcoin will have privacy at the core, meaning it's going to be impossible to trace stuff. Is your firm or is the government is aware about that? That's my question.
So what happens from the tax authorities' point of view?
Yep.
What they've sort of been thinking is that there is enough information out there to trace what's happening with most cryptocurrencies right now. There's an interesting development in terms of what we call voluntary disclosures in tax that I think sort of will foreshadow what will happen no matter what the trend is in terms of privacy. In the past, when people would do transactions abroad, nobody would know. Now we have these exchange of information, we have these electronic records, we know what everybody's done pretty much most of the time. I mean, yes, you can be on the black market doing very illegal tax evasion and maybe you get away for a while, but eventually we will find out. But back then, nobody knew. So they came up with voluntary disclosure. You could go to the government and say, hi, so, it happened that I forgot to declare that $6 million over in Switzerland, which I may have gotten from the sale of a business that I also forgot to declare. But also I've been making some income on it, dividends, interest, whatever. That's been pretty good over the last few years. And I forgot to declare that too. How would I come and pay all the tax and the interest? So from you, cash flow, government of Canada, responsible for all the Canadian taxpayers who are working hard and paying their taxes, you are in the same position as if I had declared all along. You got your money and the interest you would have earned on it because they charge you 6% capitalized daily, right? So it's a pretty good rate. If they refund you, they give you 1%. So just to give you an idea. So you got a spread on there. So you're okay, you got your money, but you in exchange will graciously waive the penalties and any criminal proceedings you may wish to take against me. And the penalties, to give you an idea, because you have normal penalties and you have gross negligence, you so blatantly forgot to tell us that you have this money. It's not like I made $20 and I forgot to declare it. You know you have $6 million. Nobody forgets they have that. So with that, the penalties over time and interest, let's say you've earned, let's say you had $100. This is all the cash you have, all the money you have. With the penalties and interest, you could owe $150 to the government. So you have to find $50 more, and multiply that on your $6 million. You have to find $50 more to pay them. So it was a great break. Sort of give you a carrot so you can come forward and we collect the tax without having to go out into the world and get this information and find people. And it had to be voluntary. If they found out about it and they sent you a letter, it was done. You were never going to get the waiver of the penalties. And they recently changed that system and to say, in most cases, we will pretty much just waive the criminal. And it's a lot less easy or good for the taxpayer because we think, and this is what they said, that we now have enough information about taxpayers in the world that we don't need to incentivize them to come forward. We can just go and whack them with the stick because they haven't been complying. So that's sort of the way that it worked. At first they will put out a sort of, hey, yes, it's true, we don't know how we can get this information from you. How about we offer you this carrot, come forward, declare it. We'll be nice about it, won't put the penalties, just pay us the money as if you had paid it all along plus the interest. And then eventually one day they'll say, you know what? Because yes, it's true. We can come up with technology that hides information, but I have never seen humans to not be ingenious enough to come up with technology that finds it again. So I think eventually they'll come catch you. It's just a question of how long, what's your risk tolerance? Do you really want to be doing that? If it's egregious enough, they will go for a criminal to make an example and it's really unfair. Everybody else pays their taxes and somebody else makes a lot of money. And honestly, in my experience with some of the people that have made a lot of money, they're kind of going, Laura, I just did a little something. I have $16 million. Even if I have to give half of it to tax authorities, I still get to keep the difference, and I sleep good at night. Or if I give, I say it's capital gains because I think I can support that position, I'm still pretty happy with the money I keep. It's not a bad deal for me. So because if I did anything else, I would still be paying taxes. I mean, what else are you doing that doesn't require you to pay tax on it? What else can you make a profit on that is tax-free, right? So I think that's sort of the general trend. Now, will there be winners and losers in this? Of course. But overall, as a long-term view, I think that's what they're thinking as well. I think there was a question here.
About the foreign property, are you talking about you holding on exchanges or your personal crypto wallets?
So the question is whether foreign property, crypto as a concept, whether crypto is a foreign property. Does it matter that I hold it on a foreign exchange or in a personal wallet that's in my pocket in Canada? And it's not certain. I mean, there is no clarity, and they know that. Because let's say for 1 minute, you and your phone, which is your has your crypto wallet on it, go to the United States. All of a sudden, you have now made your crypto foreign property. So, just say it's all foreign property or that it's not, who knows? It's really, there's no clarity on that. Maybe there one day will be a special form that says, please report all cryptocurrencies on this form. And then you don't have to worry about where it is and what it's doing. But there isn't. So I have asked this question, how do I know where it is? And this is sort of the logic of it. So
it's impossible to define because your wallet doesn't contain your coin. You just have the key to access your coin. The coin are like...
So it's impossible to define where crypto sits because it's everywhere. So if it's everywhere, technically it could also be outside Canada. Because somebody who has this copy of the blockchain could be outside Canada. So obviously tax world, when I was doing these conferences before, I used to say, we're trying to put round concept into square tax pegs. Nobody has ever thought of tax in this way, and there's lots of things that tax is rushing to catch up with, including e-commerce generally, if you look at it. So obviously blockchain with its distributed ledger, distributed existence is a problem. In fact, if you look at how they treat, and I mentioned earlier the court decision that said that Bitcoin, from a sales tax point of view, is a currency. There's a German decision that says, in the mining context, that there cannot be a supply to the blockchain because the blockchain is not a person, so it cannot be a recipient of a supply. And logically, well, why is a corporation a person? Because there's a law that says a corporation is a person. It's not any more a person than that. So maybe one day the law will say blockchain could be a person, even though there is no existence as we see a corporation. It's still an association, and we had some examples where they tried to do that that failed miserably, but still was in a future of people associating together. So there's lots of things in tax that don't yet, and in law in general, that do not yet match sort of the challenge that blockchain is bringing. I think if I can just give you a message is to say, I think it's important to keep up with how the law and tax and securities and everything else is trying to catch up, because it will eventually catch up. It will eventually apply. And I think that's just the main point here. And in the meantime, there's some hiccups, and we're trying to work through those points, but I think that's about that.
Can they backlog with the future laws?
Can they backdate laws?
Can they,
Yeah. Can we make a law today that retroactively deems something to be something? Yes, they have in certain circumstances done that. The only one where they don't do it is in criminal law. They will not make something retroactively criminal. But there have been certain scenarios where somebody has done something particularly egregious to tax planning that's just terribly bad, and that has been taken to court by the tax authorities, and that person has succeeded, and then they drafted a law that says this exact thing, and it's very detailed. Sometimes tax is very detailed because they're literally tracing the contours of somebody's tax planning, and that's why it's so detailed oriented, and they'll say it applies that, and it's really funny. 15th of May 2 years ago, because that's when the day before that transaction or the day of that transaction. So theoretically it's possible. I don't think there's a huge appetite right now, unless they're going to clarify something in a positive way for taxpayers, that they would now come along and do something very unfair retroactively, because there's been a lot of pressure put on them to say, can you come out with something? Come on, look, we don't know what to do. How do I report when it's in? Why can't I just report when I buy in and then when I sell out instead of every single transaction? You guys even don't have the records. How we, what about the sales tax thing? Nobody can collect sales tax because, I don't want to go into details, but it doesn't really work at all. Nobody can claim refunds of it. It just doesn't work in the world that we're dealing with. And they've been sort of working through that process. But they're pretty fast for a government agency. But obviously, we move faster in the technology world than they can. So I wouldn't be afraid that they'd come out with this horrible application that's going to be effective 5 years ago. I think there could be some basis to challenge that. But they might say, look, going forward, this is what it is. For the next 2 years, we're going to be very fair how we apply it. In the past, we're going to be very fair how we apply it. We won't be too strict. But 2 years from now, we've told you, please don't let us catch you doing it this way because you've had fair warning. And I think that may be a very fair and sustainable solution, but I don't know the timing on that yet. Yep.
Put my host hat.
Yes. Do you want the mic?
No, it's fine like that.
Okay.
Right now we're going through a Q&A.
Yeah.
It's awesome. You're doing a very great job, by the way. Do you want to present maybe some topics that you know that we should know before we continue to ask all those questions?
So I'm going to
prefer to continue with that.
It's really great, these kind of Q&As, because you guys actually hit almost all of the topics I had. There is one topic that we haven't gone to yet, and it's ICOs. And ICO, we sort of touched on it a little bit, but we haven't gone into detail. And part of that is maybe you guys is not something that you do a lot, but also, and people can buy into ICOs and not have to worry too much about the treatment. It's sort of the same as I've said. But if you're issuing an ICO, then you might have to think about tax more, because it's very uncertain what the results should be. But technically, it's not clear if when I issue an ICO, what I'm getting, is it revenue? So I've issued X amount of tokens, or right, which is a promise in the future to deliver, or maybe just write to tokens in the future when I develop the software. Is that money that you're giving me for this revenue today, a deposit against the future, some sort of installment payment? What exactly is it? And then when do I, as the issuer, have to report it? Because if what I'm issuing is a security from a tax point of view, not a securities law point of view, if I'm a company and you invest in me, I don't have to declare that. It's capitalization of a company. But an ICO is not a company. So when it receives money, it's not receiving capital or equity contribution to a corporation. So there's a lot of questions about am I supposed to declare that income? And I think that's going to be a very interesting place for them to go look for money, because there's all these entities or groupings, what you want. Usually it's through a corporation that you issue an ICO, even though it's not in exchange for share the corporation, but it's in exchange for a future promise to receive a token on that platform that you're developing, right? Does anybody not know what ICO is, just in case I'm running off and everybody's nodding yes? Okay. So there's income tax questions, and obviously the perennial sales tax issue comes up too. If you're selling tokens, and tokens are not a currency, shouldn't you be collecting sales tax on it? And that means that, a percentage of the money you got right off the bat is sales tax that you owe to government, because sales tax you collect is not your money. You are holding it in trust for the government of Canada or Revenu Québec or the government of Quebec, and you have to remit it to them. And there's nothing that the tax authorities hate more on this human earth than people that collect sales tax and don't remit it. That's the story of the restaurants or the construction companies who collect sales tax and don't remit it, or claim input tax credits, sales tax credits, and didn't do the work. So that's sort of the two questions that are really outstanding, and there's a lot of debate that's not clear yet, whether or not there's a difference depending on what kind of token you're issuing. Is it a utility token? Is it more like a security from a securities law point of view? Is it, what kind of token is it? Should that drive your tax treatment? So that's something that I think will be about 2 years from now that they will really focus on it. First wave will be really on sort of traders, miners, people who have been, where the money's coming through the bank accounts eventually, so they can catch you somewhere like that. And then, or they got the information from the exchange like Coinbase, where they had to give all that information to the IRS. Well, the IRS, you better believe, send it to the CRA because that's their obligation under the agreements. So that's sort of the next step. After that will be, what do we do about all these people who raise money? And it's not hard to find them because the Securities Commissions pretty much went after most of them. So we just, okay, after they're done with them, let's go and see how we should be treating that. So I think that's another area where the thought is still ongoing about how it should be taxed. But eventually, if you get $100 million in an ICO, some of that's going to be taxed, right? So that's sort of the next level. I think if you're just an investor, it's less of an issue. Some people who are investing in ICOs are doing it through pools because that way they can qualify as a qualifying investor. That's not really true. You have to be alone a qualifying investor. You cannot be 100 of you a qualifying investor. So I think that's going to be something that, as the Securities Commissions go after, more of these will be less and less available because the issuers will be scared. It's not so much an issue for you as an investor, but it might invalidate your investment, and then how do you get your money out? But it's more of an issue for the exchanges or the ICO issuers themselves, who could be offside the securities rules. So I think that was sort of the last point. And if anybody lends cryptocurrency, I don't know, has anybody ever lent a cryptocurrency to somebody else? There's somebody here. Okay, technically, until it's deemed to be a currency, every time you transacted in it, you had a gain. So let's say I lend it to somebody else who sells it or to buy probably a rig, right? That's usually the classic example. And then they mine and they give me some back, a different one, basically. Well, when I gave it to them, I've disposed of it. So you had a gain at that moment. And then let's say next year they give you something back. Well, now you have a different asset with a different cost. But you had a disposition at the moment you lent it out.
Oh, so you don't just declare the interest you might earn on it.
So you don't just declare the interest on it. You have
Converted it. Well, what if it just stays as Bitcoin? What if it's not like converted to fiat?
So even so,
you lent it somebody as crypto, and you've got an account.
Yeah.
It's like a bank account.
Yeah.
You're making a deposit of Bitcoin. You're earning Bitcoin, and it doesn't. You're not exchanging it to fiat at all. Is there still a?
So if you're lending a Bitcoin to one of those, I know there's one that you lend and then they give you some sort of return and then they eventually give you back. I don't know if they give you the same Bitcoin or a different one.
Like Bitbond.
Yeah. Is Bitbot you said?
Bitbond is one.
Bitbond. Okay. Technically, it would be treated as a disposition when you lend it out. Then you.
To US dollars. Or
No, anytime you dispose of it and it's not, you could theoretically be treating it as a disposition. But it's not clear. So it's sort of an area that they haven't yet addressed, but it's something that, as we go, the other thing that they haven't addressed very much, the US was trying to address it though, is forks. Forks and everything that splits or multiplies crypto is a big issue because all of a sudden you have something that's supposed to not have any value, the old chain, but still remains and people trade, so it obviously has a value. And magically now you have the forked, so the new, if I'm going to say it, the fork where it goes off to the new one, which also has a value. And it's not clear how it should be taxed. Is it as if you got a dividend or a return on your investment, so immediate income taxation today? What if your exchange doesn't even allow it, so it doesn't have it at all? Do you have constructive receipt of this other coin? Are you taxed today or only when your exchange finally starts to also list this new coin? because that makes a difference. If I'm told today I just got the new fourth coin, but my exchange where I'm on doesn't allow me to get it, technically I have something that is worth $3,000. Technically I have to pay tax on $3,000, but I can't even sell it because I can't even access it. So the US was looking, there's a lot of writing in the US on that point to argue, it doesn't make sense. And, again, tax authorities are saying that's true, it doesn't make sense, but we don't yet have published position on how you're supposed to treat it. Maybe there is an argument that until you get it, until you can actually access it and sell it, you shouldn't be taxed. But then when you finally do have access to it, are you taxed immediately when you got it? Do you have to accept it? Can you refuse it? What if you don't want it? You can refuse the dividend. I don't want it. So there's still a lot of questions on that. Go ahead.
I'm going to describe, a complex sequence of events.
Complex sequence of events, okay.
So I buy Bitcoin at X price, it increases to Y price. At Y price, I use this cryptocurrency to purchase a debt obligation denominated in fiat currency. So there's a lending company I actually work with, Alchemy, which is going to be allowing people to purchase a debt obligation denominated in fiat currency with Bitcoin. At this point, now that I've converted the Bitcoin into a debt obligation, do I have to pay cap gains at that point? Or do I pay, or how does the tax work as I then receive the payout from that debt obligation?
So you have taken a Bitcoin that you bought it for X dollars, has gone up to Y dollars, and now you are exchanging it, transferring it for a debt obligation that will generate interest on it.
Correct.
So any time, it's a talk, it's a barter, okay?
Yes.
If I give you that chair for this, okay, you don't have a chair, no, I'm not allowed to give you this, but let's say I did. You don't have a chair anymore, but you have this. So have you disposed of your chair?
Yes.
So why would the fact that you give your Bitcoin for anything that has value not be a disposition of your Bitcoin? Okay, so you now have a new asset, so you have a disposition for the value of what you got, for the value of what you got in return, and that's taxable if there is income or capital gain, depending on who you are, how you're treating this, how you're handling Bitcoin, the business you're in, right? And then, of course, now you hold a debt obligation, and in the normal course, it has a cost. If you were to sell it to somebody else for a gain, there's rules about that, so you'd have some tax there. Or if you just hold it until maturity and you just get interest on it, then you would get taxation of interest income.
Okay.
So you're going to the normal world, if I can call it that.
Okay, so the bartering is a taxable event, and I need to be careful that I have enough liquidity to be able to pay the taxes.
Yes.
Okay.
Yeah, so this is the issue that we have, because you're treating Bitcoin as cash, as currency in your mind, and that's why some tax authorities are starting to go there in certain specific circumstances and for specific crypto, like Bitcoin, saying this one looks a lot like currency, but come up with some other one, Laura coin, may not look like currency. So don't assume that because they've said for one, it will be for all, because not all of them will function the same way. And the economists in the room will describe what is a currency, and what does it have to functions it has to have, and that's where the arguments are. Bitcoin is starting to look more and more like a currency, unit of exchange, whereas other things may not. But until you get there, they're still saying it's as if you're selling an item, an asset, for a different asset. A debt obligation is an asset to you, the same way that a
somebody had Bitcoin in 2016.
Yeah.
And then there was a fork. Let's just talk about the Bcash fork that happened and had, let's say, a lot of value. So would it be, in Canada, Bitcoin is treated as a commodity. So in Canada, is it fair to say that assuming you decide to sell post-fork, let's say you had one Bitcoin and then you had bought it at $5,000, You sold it at 10, and you also sold your Bcash
Yeah.
at $1,000. Is it fair to say that the second sale of Bcash should be reported as a zero-cost basis trade?
So if
Capital gains purposes?
So if you had one crypto, Bitcoin, and there was a fork, so now you have the old Bitcoin, what was it, Classic, and then Bitcoin Cash. The new Bitcoin that you're getting, it has to have a cost basis. So how much you got it for? But you didn't pay anything for it, so the cost basis is zero. And so if you sell the new Bitcoin Cash, for $10,000, well, you have a gain of $10,000 because you paid nothing for it. And it's fair because you didn't do anything to get it, really. You just held that the right crypto at the right time. So that would be generally how it was treated. There's no cost to it because the old one has a cost that is still associated to the old Bitcoin.
One could say that the coin from the fork, you already buy it because you bought the original coin, the Bitcoin before you fork. And when you fork it, it's just a duplication of it. So you bought the twin brothers somehow. So you should be able to split the cost, or it's.
Okay, so the question is, can you split the cost of the original coin between the old coin and the new one? And I'm not sure that's necessarily true because they're separate. So there's concept in corporate law about stock splits, but overall in a stock split, so let's say you have one stock and you want to split it into two stock, the value overall is the same. So they treat it as, there's specific tax rules that say this is how we treat it. And the idea is not to have any tax consequences as a result. It's just overall, if you sell all the two shares, you have the same gain and the same treatment as if you only had one share all along. But for one, the tax treatment is specifically spelled out in the tax law, which is not the case here. And secondly, overall, you didn't create any value through the stock split. It's done for other reasons. So here, you've created value. You've gone from something that was worth $800 to something that's worth $800 and $300 for the new one. And because you sell them separately, I'm not sure you could argue we can average them because they're not the same type of asset anymore. It's you have one and the other, and they're sold separately. So I think you would keep it to the first one, the cost, and maybe you could have a loss because it goes down in value. So when you sell the first one, it's a loss, and then you'd have maybe a gain on the second one that goes up in value. Will that change over time? Will there be some? But I think we have to sort of either come to a consensus where the tax authorities get comfortable with it and we can go forward on that advice, or maybe one day legislation will specifically address this new way this new way of creating value through these forks. And forks are kind of not supposed to happen all the time. Maybe they do happen too often, but it's not a normal thing that should be happening regularly. Otherwise, it sort of defeats the purpose of a blockchain, right? Yeah. I promised you, and then. Okay.
Actually, I have two questions. I start with
two questions. Oh my goodness. Okay.
What if I do a Christmas gift to someone at one point in time? I don't follow the course. I don't know what to do with it. At one point, they turn it in fiat. So if I buy it in January and 2 years later I gave it to my daughter, and how does she? I mean, is she gonna be taxed on the moment I bought it, and then the moment she sold it?
So somebody who has an asset that they donate is disposing. So there's a concept in tax about disposing. You get taxed when you dispose. And disposing isn't a sale for money necessarily. You could sell for $0, or you could dispose for $0, which is a donation. So you dispose at a certain amount. You dispose for $0 a donation, but it's worth a certain amount, which is more than what you bought it for. You have a gain, whether it's capital gain or income inclusion, and then her cost will be the value at the time of receiving it. So let's put numbers to it. $500 cost, $1,000 value at the date you give it to her as a Christmas gift. You pay tax on $500. Either it's a capital gain, so half of it's taxed, or it's full income, $500 is taxed, depending on what kind of business you're in. You know, are you investing in it for the long term, or are you a trader in crypto? Your daughter gets this coin at Christmas with a cost to her of $1,000. If later on it goes to $1,200 and she sells it, she gets taxed on $200. So we went from $500 to $1,200 with two different owners. You pay tax on $500, she pays tax on $200. And maybe to you, because you're in a business, it's real income inclusion, 100% inclusion in income. But she just holds this one coin that you gave her as a present, so maybe she'll get capital gains treatment on the $200. So you see how there could be different treatment depending on how you're interacting with that asset.
How come you can make capital gain if you dispose it, like you sell it for zero?
What'd you say? Sorry, Diane?
How come you can make capital gains if you buy it for 500 and give it for free, so you like sell it for $0, right?
How come you can be taxed?
Like you don't make any gain. I mean,
So,
even if the price of the assets is rising, when you dispose of it, you lose
because, so in this case, so if you are giving it away to a stranger, you're right that if you give it away for free, you shouldn't be taxed on it. But there are specific rules that address related parties, and a father is related to his daughter, a partner is related to the other partner, parents, etc., and corporations can be related to each other if there's if there's controlling shareholding. Okay, so just generally. So when a related person is so generously giving away something to the other person, they're deemed to dispose of it at fair market value. And there's rules even that if a related person sells it for less than fair market value, they're deemed to have disposed of it at fair market value. And it's even worse in that case because the rules say if you make a donation for $0, you're deemed to sell it at fair market value, but at least the person who gets it, they get a cost of fair market value. So the $1,000 your daughter gets it, she only gets taxed on the extra $200 that accrues over time. If you sell it for less than fair market value, so let's say it's worth $1,000, you sell it for $500, which is your cost, so you don't trigger any gain, great. You're deemed to dispose of it at $1,000, but the cost to your daughter stays at $500. So it's penalizing you because you're trying to, because we think the tax law thinks that related people are doing it in common, right? Because you would never give me, just out of the generosity of your heart, walking down the street, free money, unless you really do want to do it, and in which case there's special rules and there's charitable donation rules where you get credit, you know. So there's obviously scenarios we accept that people will do not generous things, but usually people make donations between related parties because they don't want to trigger the taxable event, you know. And that's what the tax law is saying, which is deeming you to have done what you would have done if we were not related. First, yes, go ahead.
I don't think we spoke about this, but if I buy...
You found a topic I haven't talked about yet? Oh, okay, go ahead.
Let's say, because when we buy, we said that we buy at the X price and the Y price. What happens if we buy 3 times? So we have 3 prices.
Yes.
And when we sell, how do we calculate the cost? Is it an average or it's FIFO, like first in, first out?
So the question is, how do I know the cost of the crypto that I'm holding? And this is a good question. Do I make an average of the costs? Do I do first in, first out? Do I do last in, first out, which is not good? And it's not clear. It's not clear whether it should be, if you can trace and say, well, I bought this one and I sold it, which I'm not technologically good enough to tell you if you can actually trace which of the coins you sold. Theoretically, you could say, I sold the one I bought 2 years ago for $5. Otherwise, you might do an average or you might do last in, first out, which usually, depending on how the market's done, could be better or worse. Because if you say the first in, which let's say historically, Bitcoin was not that expensive back in the day, so the first in, the first out, so you sell it, we assume the first one you bought is the one you're selling, so the cost of it is quite low compared to how much it's gone up in value. This has been true until this year, and now this year it's pretty debatable, depending on when you got into crypto, right? So you pick a reasonable one, and it's more of an accounting question, how you report it, but or average, but I'm not sure they love average as much because the average keep changing as well. So it's a question of whether it's interchangeable, if it's a class or if it's in units, or how do you do it? And you may have it on different exchanges, so at least there you can trace it, which one is which that you're selling. Because
What would you treat it as you would selling shares, which is an average?
yeah, so if you did shares, you would have an average, but by class, right? By class. So if you had class A, class B, class C, you would do the average for the class that you're selling. Yeah. One more question? Nobody has more questions?